Mahindra and Ford have entered into a JV to develop, market and distribute vehicles in India. M&M will hold a majority stake in the joint venture and will invest 650 crore rupees in partnership. Yatin Mota caught up with Pawan Goenka of M&M and Jim Farley of Ford to understand the different synergies that the two auto companies expect from this India JV.
So the total enterprise value that we have agreed to is 1925 crores, out of which about 636 crore will be coming in from FIPL as debt into the company. That means current debt of FIPL will get transferred to the company. The remaining 1200 odd crores will be the equity that the two partners will put in. Mahindra will put in 51% of it, which works out to a little over 650 crore, and Ford will put in about 640 crores roughly, which is the 49% of that value.
Okay. You were talking about the large export opportunity that will be available to the joint venture. If you could tell us what kind of a geography does Ford already service from the India plant, and moving ahead, what kind of opportunity do you see from the export markets?
So right now we're exporting in more than 70 countries from India. We're the #1 exporter here, as you know. The opportunity is much bigger. In fact, we formed a new group called the International Markets Group, IMG, just for this type of opportunity. And it's over 100 countries. It's the Gulf States, it's ASEAN, it's the Africa, including a signature market, South Africa. It's even mature, smaller markets like Australia and New Zealand, where we're #1 and #2. These are all very important markets for us, and these would be the type of markets like a Mexico that we could export from India.
Dr. Goenka, you in the press conference mentioned about scale and the kind of benefits that you can get in terms of the synergies. Talking specifically about synergies in terms of procurement, especially to do with material and having locations in Chennai as well as probably in Gujarat. How do you really see the entire ecosystem shape up for the joint venture, and what kind of a synergy benefit do you see coming in the medium term?
So there are three areas where we see synergy benefit coming in. The first one is in product development itself, where probably we will get, for a common platform being shared between Mahindra and Ford, we'll probably get about a third to 35-40% kind of reduction in investment, which is quite significant because that means about 400 crore or thereabouts for each new product that we do. The second one is in sourcing, because when we combine the volume of Mahindra and Ford, the volume, let's say, doubles for the same platform. That means the tooling cost that we have, the overall overheads that the supplier would have, will get distributed over a much wider volume base, and that gives us benefit in terms of sourcing cost. Manufacturing, there are best practices that Mahindra has, best practices that Ford has, and there's a mutual learning that Mahindra and Ford would have on that, and reduce manufacturing cost. So if you combine the three together, that could be significant saving. Of course, we have not quantified it because we'll have to see. We don't know what inefficiencies there are that could be removed. Maybe there aren't any, maybe there are many. We don't know that yet. That we'll know only after we get into it.
Okay. What makes you keep out the engine portfolio as well as the smart mobility solution business out of the joint venture? And if you could also talk about the electric vehicle portfolio. Mahindra, of course, is a pioneer in India with respect to electric vehicles. How do you really leverage that portion of the business that would be outside of the joint venture?
Okay, lots of questions there. So the first is mobility and engine. Most of the Sanan engine capabilities actually export already. So it's not naturally the type of powertrain that fits the JV. So that's very natural. Smart mobility is just early days. It could easily be an option to roll into the JV. It's just too early, but it's going actually really well here in India, but it's just early days. And your third question?
Regarding the overall electric mobility, products. That
so Ford is betting big on electric, like most companies, and we're really excited about Mahindra's leadership. Pawan and I were just talking about despite the challenges in the market, the success Mahindra had last month in electric sales. Our portfolio of dedicated electric platform is really on much larger vehicles for Western Europe and the US. The opportunity here is to work together for battery electrics in the emerging markets, which is actually an opportunity that Ford hasn't really addressed yet. So we're really excited about this electric opportunity with Mahindra.
Dr. Goenka, if I may put it so, we are under a temporary slowdown. There is a lot of idle capacity in the industry. Auto companies are struggling to, maintain their profitability, which they saw in the past couple of quarters or past couple of financial years. You will have some idle capacity once, these two plants come under the joint venture. In terms of profitability and EBITDA contribution, if you could just give us a flavor as to how will the financials work?
Well, clearly in this case, the two coming together cannot be in any way detrimental. Ford alone was doing something, Mahindra alone was doing something. Together, it cannot be worse than what it is today.
Okay.
What we are hoping is that as we launch new products, for the current products, it will make no difference. Ford will do their product in the Ford plant, Mahindra will do their product in Mahindra plant. But for the future product, when we launch a common platform, two different products, then they'll be made in the same plant, whether it is a Ford plant or Mahindra plant. And that's when we start seeing the capacity utilization improving much more than what it is today. The current slowdown can never be a reason for doing or not doing something, because that's a temporary phase. And such discussions and partnerships are for very, very long time. And therefore, current slowdown doesn't really come into the picture.
And one final question on the branding. You said that you will house, the brand separately. You will continue to market your products separately. But how do you cross-sell products? Will it be available to the distributors? Meaning, a Ford distributor can sell a Mahindra product, or how will it really work in terms of the brand synergy?
Yeah, so in India, it will be completely separate, and we will not do badge engineering where we do what you suggested. Outside, there may be markets where Mahindra isn't represented at all, where Ford dealer network could represent Mahindra in a separate facility or shop-in-shop scenario. So I think overseas is a bit more flexible. Here in India, it'll be completely separate.